President Trump says he's made his choice on the next Fed chair to replace Jay Powell, but he isn't making the name public just yet. Joining us now, former Cleveland Fed President Loretta Mester. She's also a CNBC contributor. I guess you don't, you probably don't want to tell us who you'd like, Loretta, but what type of person would you like to be the next head?
Yeah, good morning, Joe. Hope you had a good holiday.
Yes,
I mean,
too.
we need somebody who's going to be a thoughtful leader who can actually corral the committee into thinking about the economy, thinking about what the best path for policy is to achieve the dual mandate goals, put aside all other kind of considerations that are not part of that decision making about what's the best path for policy to meet those goals. Everything else should be outside of the room. Everything should be about the best analysis, the best modeling, the best forecasting you can bring to bear, and then making a decision and then communicating that in a clear way to the public. And I think those are the things that I would like in the next Fed chair. And certainly many people on the list that we've heard about of being under consideration have those attributes. So I think that's what I would like to see.
You know, Loretta, we've seen Fed critics and some of the flamethrowers that follow monetary policy clamoring for reform of the Federal Reserve and really critical of it. But that's even gone a little bit mainstream. And some of the leading candidates have been very vocal about things. I'm thinking about Kevin Warsh and others about reforming the Fed. Do you agree with that? Are there things that need to be done? Have mistakes been made in terms of the way that Jay Powell conducted, or even his predecessors conducted business at the Fed?
I think there definitely are things to think about in terms of what can we do to improve the performance of monetary policy making. And certainly, you know, the last several years has been very challenging. So I wouldn't criticize the Fed necessarily for not focusing on the goals, but there's always things that you can improve. For example, thinking about scenarios and not putting all your eggs in one particular basket. Thinking about how to use, right, the knowledge we have about supply side economics and bringing that to bear in the considerations and deliberations of the committee. So there's lots of things that I think are worth thinking about. And the case study of the high inflation, I was on the committee at the time, so I can say we made a mistake in allowing inflation to continue as long as it did above our goal. And so we should have acted sooner, and thinking about, well, what prevented us from actually making a change in policy sooner rather than later. Thinking through that, I think that would be very valuable. I think what I take issue with some of the criticism of the Fed is I don't necessarily think that it's being done in good faith. I can say there are things that we should improve and the Fed should be working on, and I mean it to make the institution stronger. I think some criticizing the Fed are doing it to make the institution weaker, and that's where I would take issue.
I mean, there are some, Loretta, that actually think the whole notion of making credit more difficult for businesses and small businesses to obtain because rates are too high, actually, that doesn't work necessarily to tame inflation, and is actually counterproductive to what the goal of, I guess those are the supply side issues, I think, that you just alluded to.
I mean, you tell me what your model of the economy is, and then I can tell you whether you're making a sensible argument or they're making a sensible argument. Now, I think there's too much just discretionary. I think, you know, we should lower rates without thinking about, okay, well, what are the implications of that for price setting behavior, right? You want a Federal Reserve that's not necessarily doing what's expeditious in the moment. You want a Federal Reserve that's thinking about, okay, what are the implications? If I lower rates too much, am I going to create an inflation problem that won't be helpful to those small businesses that may benefit today from getting cheaper credit, right, but then we'll have to contend with high prices that continue to rise? And that's the trade-off that the Fed has to be making every time it makes a decision on policy.
How about a Fed chair that basically telegraphs every waking thought. Every week we know exactly what the latest feeling is. Instead of, there are some that think there's way too much transparency, and that just sets you up for failure when you try to predict things that are unpredictable.
Well, I think there is a framework that the Fed should be putting out about how it's thinking about the economy right now. Unfortunately, we don't have that framework. So it should never be that we don't know how the Fed would react if the data comes in a particular way and supports a particular view of the outlook. We should know how the Fed's likely to react. And I think that's where we've kind of gotten a little bit off track. We don't really know when the data comes in how the Fed is most likely to react to those data. The Fed's not prescient. You're not prescient. I'm not prescient. The economy can evolve in a way that we can't predict today. But once it evolves, we should know how policy is likely to react to that change in the outlook. And I think that's where we don't have very good transparency about that. The Fed's so-called reaction function, that's where I'd like more communication and better, more clear communication about what the Fed's thinking in terms of its policy setting.